This is Dale Atz from the Ag Econ Department here at the University of Illinois. I'm farmdoc research associate, and today we're going to talk about Illinois farm incomes, 2019 projections, and the outlook for 2020. This was a presentation that was done at the IFES seminar last December. So as we talk about farm incomes, just a little bit of history, especially on grain farms in Illinois. We had a very good period of about 2006 to 2007 when incomes were increased quite a bit, 2 or 3-fold, due to higher corn and soybean prices, kind of really driven by our exports of soybeans to China and the use of corn for ethanol production. That increased our prices a lot and obviously increased farm incomes. Since about 2013, though, we've built up surpluses, have kind of had lower prices, and so we've seen obviously farm incomes drop, and we've been kind of in a lower level for the last 5 or 6 years. Obviously some variation around that figure. As we look to 2019 and talk about farm incomes, a number of things happened in 2019. Obviously, the biggest one was probably the weather conditions. Late planting, late harvest, concern about yields with the late planting, and a number of things like that. It turned out that yields weren't quite as bad as what we had expected, maybe given the late planting, but they were down from our levels that we've been seeing the last 2 or 3 years. One of the other items that was important in terms of farm incomes was what was called MFP, or Market Facilitation Payments, by the government to help offset some of our trade loss to China in our soybean exports. These payments ranged anywhere from $50 to $70 to $80 per acre for Illinois producers, depending on the county you were in. And obviously, as of today, we're still kind of waiting for that last 25%, which has supposedly been announced, or I shouldn't say announced, but the Secretary of Ag has said that will happen, but it hasn't happened as of this point in time. But we have received 75% of those payments to date. Mentioned yields a little bit. We did have lower yields this last year compared to the previous 4 or 5 years, but we had substantially good yields for most of those years, and yields quite a bit above our trend averages or trend line. So even though we had lower yields last year, if we actually look at Illinois corn and soybean yields, they weren't very much below our trend, below what we've had, but still basically pretty close to what our trend line would be. So as we talk about projections for 2019 and 20 and look at our marketing year average prices for corn and soybeans, for soybeans we've been at and around that $9 level, a little above, a little below, mostly below for the most instances. Again, down from our peak going back to 2013 or so. Again, lower soybean prices really recently due to the trade wars, if you want to call it that, with China, and a drop in our exports. So it's been hard to kind of break above that level unless we do some things to increase our exports. If we talk about corn, for the most part, we've been in that $3.30 to $4 range the last number of years, averaging below $4 for the most part. Currently, we are around $3.90 as far as what we used for our projections, and that's pretty close to what the current price scenario is. Again, very difficult to sustain anything above that $4 level unless we have some weather hiccups or some new demand that surfaces that we have not been seeing. As we look ahead for 2019 and 2020 and look at some budgeting figures, we can see when we look at the 2019 figures for corn for Central Illinois, using kind of an estimate yield at this point in time of $3.90 per bushel. With the MFP payment, we're showing about a $36 return to the farmer based on those yields and prices and costs. That does include a significant MFP payment, as I mentioned, of about $82 per acre. If we look to 2020, using trend yields at that $3.90 price, we would be showing a negative figure of about $17 to the negative for a return to the farmer. To get that to positive figure, given our cost level, we would need to have some MFP payments again, which probably won't happen, or above trend yields, which we would hope for. If we look at soybeans, it's the same thing. For 2019, with the MFP payment in there, estimating a yield of 55 bushel per acre, we were at a negative $37 per acre return to the farmer. Looking at 2020, again with trend yields, a $9 price, and no MFP payments, we're at about a negative $58 per acre. So again, without above trend yields or some other assistance, we're still kind of looking at lower returns for the upcoming year. And if we graph that out, again, this simply shows what our incomes have been the last number of years and what our projections are for 2019 and 2020. Again, given kind of the basis of just trend yields and the prices we're looking at, to have incomes above levels that we're projecting, we would either need, again, some kind of MFP program or hopefully yields that are above trend levels that we've seen. Just quickly on cash rents, of course, cash rents and land values are driven by farm incomes. We've seen cash rents in Illinois go up when we had the high income period. We've seen some retrenchment now of that as we've seen lower income yields. And last year or two, we probably stabilized on cash rents. This is a graph here of the whole state of Illinois from NASS. If we look at the Illinois Society of Professional Farm Managers surveys that they take, we're expecting a little lower rents in 2020 from 2019. And you can see the figures there, around $300 an acre for excellent ground, and dropping down that from lower productive ground as we see yields go down. Quickly then, summing up here and looking at farm land values, again, a significant increase in land prices as we had higher incomes. That we peaked in 2013. Since that time, with the lower incomes, we've seen some retrenchment again on land values, seeing excellent ground dropping from the 12,000 acre average or above down to about 10,000, 10,500. We're probably about 13 to 15% off our peak. But again, kind of stabilized the last year or two and not have still at pretty good levels, really, considering the drop in farm incomes. So that's where we're at as we look past, looked at 19, look at 20. Again, without significant increases in yields or something that changes our supply and demand and raises grain prices, we're probably looking still at moderate to lower farm incomes than what we experienced in that high period in the 2006 to 2012 range.